All right. Good morning, Andy. Thanks for joining us bright and early on the West Coast to talk about
Yeah,
an update on the Iran war. So thanks for getting ready for us, getting up out of bed and brushing your teeth at least.
all the important things to start the day.
That's right, man. Absolutely. So we'd like to just keep everybody, updated, up to speed as far as how to think about some of these things. And as we enter kind of like I just said, the second week of this conflict. And so you've written quite a good write-up for us today that will also get out to our leading edge family, friends, and clients on email as well. So look for that coming probably later today or tomorrow. Today's 13 March, Friday. But Andy, here we are, second week of this. We're going to talk today about the latest developments and then how we should be thinking about it. Are there things we should be doing with portfolios? What impact this might have on the economy as a whole? And then again, what can we do? How should we think about it? But Andy,
Yeah.
what do you think, first of all, big picture things? What's on your mind?
Most importantly, it's Friday the 13th, and
Hmm.
most people are worried about that, or is it bad?
Hmm.
It's bad, but I was born on a Friday the 13th.
Oh, I didn't know that.
Yeah,
No
yeah. It's
wonder. That
actually today. Today is
explains
my
a.
birthday.
Are you
It's
serious? I didn't know that.
Friday
Okay.
the 13th. So
Happy
I'm
birthday.
positive, I'm jumping in, I'm happy,
Yeah.
I'm feeling good.
Nice.
Yeah.
Happy birthday
But
too. I feel
yeah,
totally lame
thanks.
right now.
That was the point. Yeah.
Okay. Awesome.
No, I think it's like you and I were talking. It's like things
Mhm.
are going to happen fast. I think that's actually a really good message for the readers and listeners
Mhm.
is whatever we say today, I think by the time market closes, it could be totally different. And that's
Mhm.
actually a pretty good message, I think, for investors. And
Mhm.
we'll talk about why, things are moving the way they are. I mean, obviously it's a dynamic situation. War, conflict is dynamic inherently,
Mhm.
and things can change pretty quickly.
Yeah, absolutely. And as we talk about all these things about energy prices, stock markets, first of
Yeah.
all, you wrote in your article a really nice job of just kind of going, hey, a year ago you were sailing through the Strait of Hormuz. I think I pronounced
Yeah.
it correctly. And so we
Yeah.
know people over there. We have American women and men serving in our military, and our thoughts and prayers are
Hmm.
with them. In fact, just recently we had a KC-135 go down in Iraq. I don't know much about it right now. I was trying to catch up
Yeah.
this morning. We have clients, friends, and family that are flying KC-135s and deployed. So, again, we don't know what that is right now. So this stuff is very personal. It's close to home. We
Yeah.
know that, but we also want to make sure our clients and folks are prepared financially as well. It's okay to
Yeah.
think about that at the same time.
Yeah. I think it's important. I mean,
Mhm.
everything you said is absolutely correct, but it's okay to think about how
Yeah,
this affects you and your
yeah,
portfolio. That's
absolutely.
normal.
Yeah, absolutely. So the first thing you started talking about is just the Strait of, Hormuz. I think where we're at right now is that they've said it's going to be closed for a while. I think there's two big themes here where you get different messaging every day, but one theme is
Yeah.
like the president saying, hey, we want, this is going to be over soon. And I think that
Hmm.
message is soon, 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 it's going to be over. But that may not be the case. So there are obviously two scenarios. One,
Yeah.
it happens quickly and it's over. Again, we all hope for that one. But secondly, it could drag on for a while. And that affects the US economy. It affects energy prices. That's kind of the one of the first things you talked about there.
Yeah. I think the number one thing is just what is the importance of the Strait of Hormuz, and then how
Hmm.
does that translate into the markets, the economy? Something like 20% of the world's oil flows through that choke point, which kind of makes sense. And a lot of that it goes to Asia. So of course they're going to be hit probably the hardest, right? They've got their strategic reserves, but in terms of like actual ability to get oil, that's going to be impacting Asia. And so I think a lot of people think, well, the U.S., we're actually a net exporter of oil. We actually produce quite a bit of oil. It's light, sweet crude. It's a little bit different than the Brent heavier stuff that flows through the Gulf. So the uses are a little bit different. But for someone may say, hey, does that, we should be fine. We actually export. And so gas prices shouldn't rise in the US. And that's probably not true because oil prices are global, right? It's a supply and demand. And so if you lose 20% of your oil productivity,
Hmm.
even though are net exporters, that will probably translate through, depending on how long this lasts, into inflation, right? Because prices go
Hmm.
up, gas at the pump. Will it translate negatively into the economy? maybe less so than say like the 1970s, right, where we
Hmm.
were a manufacturing net importer of
Yeah.
oil. And so those may actually offset a little bit because if oil stays above $100 a barrel, well, that's good for energy producers, and we
Hmm.
happen to have part of that as a larger part of our economy than we said we did
Yeah.
in the past. Yeah,
And I think
it won't
it's,
be a one for one.
yeah. And I think it's amazing too that when the price of oil drops below a certain level, it's not profitable for producers to get it out of the ground. And so they just
Yeah,
stop producing. So that's
yeah,
something I
burn
guess
the
that could happen.
well.
I think none of these things are quick though, right? They're doing all kinds of things. And that's to your point. I think we've learned from what happened in the 70s. And so they're turning on reserves. Maybe production picks up a bit. None of those will
Yeah,
happen immediately. The shocks will still go through the system. And Andy, you wrote a really nice piece in this article about like, hey, don't try to compare this to other times. You just mentioned the 70s. Even in
yeah,
2022, when Russia invaded Ukraine, people
right.
will want to draw parallels to that, but not so fast, right?
Yeah, it's different. We talked about the 70s, maybe why that's a
Hmm.
little different. Talking about Ukraine, this was the last time, and why it's important is this was the last time oil was over $100 a barrel. Russia invaded Ukraine. Lots of sanctions on Russian oil. So again, supply crunch, demand remained relatively stable. So you could say this is going to happen again, but that was different, right? That we had the
Yeah.
pandemic, right?
Hmm.
We had lots of money sloshing around from reasons other than the price of oil that was creating lots of less than transitory inflation,
Hmm.
as policymakers tried to intimate. So that was a totally different environment. And so again, it's just anytime you try and draw exact parallels,
Hmm.
I think, and then you try to translate that into your investment decisions or how you allocate your investments. I think that's where you start to you might be right, but you might be wrong, and
Yeah.
so you run risks,
Yeah.
right, of those things
It's just
happening.
amazing how complex this is. You also
Yeah.
did a nice job of talking about, this time a year ago, we were talking about tariffs and all
Hmm.
those things going on affecting the markets. One of the things you mentioned, this is very different. Obviously, war is very different
Yeah.
because it's not a unilateral decision.
Hmm.
The enemy and countries impacted by all of this have a say in this outcome. And so
Yes.
we don't know what to expect. This is not one person gets to dictate the outcome here. So I think it's safe one of my things is like, don't assume anything
Yeah.
because it's too
Yeah,
complex,
that's right.
you know?
Too complex, and you said it. We said, my time in the Navy and when I was on active duty, probably the same as like, you got a perfect plan, the enemy gets a vote, and they get a say in the outcome. So the markets have been they're down, right, since the conflict started. I think a little over 2%. I'm talking the S&P 500, but it hasn't been a panic sell, and it's sort of vacillated. We had some up days, down days. This Monday was really interesting, right? The futures started down like 2.5%. We ended, you and I were like watching in real time
Hmm.
together. In the last 30 minutes of the market, it was like a 1%. That's like a 3% swing. I think
Hmm.
the point is like you can't catch it, right? Like if you
Yeah.
think you can time this, like that's so fast that like you're not gonna be able to do it. But I think
Hmm.
the other thing is right back to, hey, the enemy gets a vote, right? The strategic reserves that were released by the IEA, the US, that'll help maybe alleviate some short-term supply. Maybe 20 days is kind of what that is. But
Hmm.
I wouldn't be surprised. Well, I say it wouldn't surprise me if at the end of the day today, there's a ceasefire, both sides agree to stop, the straits are open, and the market's like boom.
Yeah.
And then also, I think it would be naive of you and me, you and I, Charlie, to sit here and say that this might not last, or this is going to end quickly. This could be prolonged.
Yeah.
The Iranian leadership, I think, is fairly emboldened.
Hmm.
They're humans, just like any other human, and their supreme leader, the new leader's dad, was killed, and so they're
Hmm.
going to probably act like human beings sort of act in those situations, and
Yeah.
so they could be committed to keeping the straits closed in an asymmetric form. That they're not going to win a war against two aircraft carriers and
Hmm.
all that, but asymmetrically, they could be committed to that, and I think We just don't know. So I think the market response has been for kind of what we're experiencing, probably a little bit muted. And I think that that actually sort of makes sense to me in terms of
Mhm.
how it's pricing in what direction this could go. And it's sort of it's kind of like a I don't know with a little bit of a this is bad sort
Yeah, there you
of sort
go.
of tilt. But that can, again, that can
It
change like
is.
this.
Yeah, and you talk about the irrational behavior of human beings. The market acts the same way in the short term because
Yeah.
it's human beings voting on prices of whatever they think is going to happen. So the markets can be very irrational along with human beings irrational in the short term. So very
Yeah.
noisy right now. To make any decisions right now to me other than the fundamentals is very risky.
Hmm.
Decisions like, oh, this is going to happen, therefore I'm going to do this. To me, that's a
Hmm.
risky way to handle this. Not to mention lots of other non-Iran related academic data driving the markets, as you noted as well. Extremely complex, our economy, stock markets, crazy complex. And to try to
Hmm.
predict that is really kind of silly, quite frankly, in the short term.
Yeah, yeah, you hit the nail on the head. Non-farm payrolls down 92,000 jobs.
Mhm.
That came out last week. And so we have other things happening, right, in the economy that aren't related to the price of oil and the conflict that the markets are going to be pricing in all of these things. This is a chess game,
Yeah,
um, and it's a thousand different chess games happening
yeah,
simultaneously. So
yeah.
uh, proceed with caution.
No kidding. I like when you said this is not the moment to make big predictions, but if you do, don't make them with your retirement investments.
Yeah, that's
Predict
right.
away
Yeah.
over a
Yeah.
glass of wine or beer or something. But
Yeah. Yeah. If you want to go on your, your Robinhood account and
yeah,
buy some oil futures,
there you
yeah,
go. Whew.
have at it. Yeah.
Yeah. Absolutely. Yeah. Just be careful of the complexity. Don't overestimate your own power of prediction or underestimate the complexity of the
Yeah.
markets for sure. And so, Andy, as we wrap up here, let's talk about, we can talk about what to do. And I'm going to leave that to you because I'm going to talk about what not to do for a minute
Hmm.
for those out there that are listening. And we've already mentioned some of them. Don't try to predict with your retirement assets right now. Just understand, have some humility that we just don't know whether it's going to be bad. Let's not assume that the market will go in a terrible direction. It may not, because that's a risky thing to assume as well, right? And then don't try to outsmart, the scenario that's going on right now. Prepare financially, I think personally, I like to prepare always by having a strong balance sheet and not making rash decisions here. Stay disciplined. And, I think sometimes the last thing I'll say before I hand it off to you is we have a tendency to go, again, think linear. We have a tendency to think linearly, like you talked
Yeah.
about in the article. This is happening, therefore this is going to happen. Not,
Yeah.
don't do that because then we go, all right, now I'm going to become more conservative. And that has its own risks as well, because you end up going in and changing your original game plan that was meant for you, that was built for a lot of other decisions. And so those are things that I would caution against. Um, Hopefully that makes sense because when I wrote down, Andy, some notes that I was thinking about, I wrote down more of things, what not to do. Don't go buy
Yeah.
energy futures in your retirement fund. Don't make
Yeah.
bets on Exxon or, XLE, whatever. To me, it's just a time to stay disciplined and stick to your plan. But what do you think,
Yeah.
Andy?
All of that. Yeah, that's
Mhm.
great. I think that hopefully you've got a plan in place, an
Mhm.
investment allocation that was built for these times. And so, yeah, you might have some things that are down. These are times tax loss harvesting, right? So if you've got positions that are down, we've been doing that for our clients with that, to the extent they have a taxable brokerage account, right? Maybe we can make lemonade out of lemons a little bit,
There you go.
or just rebalancing, right? So again, same thing we're doing is cash goes in, what's gone down, go ahead and buy that. Again, that's not predicting the market. That's just
Mhm.
being disciplined, trying to stay on target and kind of letting that be your driving force. And then at some point we'll come out of this, and that's a good time to reassess. Was I actually appropriately allocated? And some market stress is a good sort
Mhm.
of time because when markets are up, we're at consistent all-time highs. It's easy to lure yourself into thinking that your risk tolerance is different than what it may actually be. So you're gonna
Yeah.
have to ride this volatility, I think. And then those are good opportunities to
Mhm.
have some internal assessments as well.
Perfect. Well, thanks, Andy, for writing this up and making the video, getting up early on the West Coast. We'll get this out ASAP.
Yeah.
But remember, this is not investment or advice. See your financial tax professional, of course. Just want to update people on the latest, maybe some things to be cautious of. But also, please reach out to us. Andrew at leadingedgeplanning.com, Charlie, Charlie, at leadingedgeplanning.com. We'd love to hear from you. If you'd rather just anonymously email through info@leadingedgeplanning.com, you certainly can. And we'd love to hear your thoughts, questions, comments, and share this video with someone that you think could benefit from it as well. And then, like I said, we'll be putting out more of these, trying to keep up, keep everyone posted. And appreciate your time today. Have a great weekend.
Leading Edge Financial Planning, LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Leading Edge Financial Planning and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.leadingedgeplanning.com. The information provided is for educational and informational purposes only. It does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. The views expressed in this commentary are subject to change based on market and other conditions. These documents may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from these projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur. All information has been obtained from sources believed to be reliable, but its accuracy is not guaranteed. There is no representation or warranty as to the current accuracy, reliability, or completeness of, nor liability for, decisions based on such information, and it should not be relied on as such.